Welcome to Bitcoin Live. I am Joe Bagonis, the content director of Bitcoin Live, and today I am joined by one of the premier mentors on Bitcoin Live, Bob Loukas. Bob, how are you doing today?
Pretty well, thanks, Joe. How are you?
I'm excellent. I want to thank you for joining us today, and we're going to take. Let me try that again. I want to thank you for joining us today, and we're going to talk a little bit about what you're going to be bringing to the Bitcoin Live platform. So let me start off with a few questions. Tell us about why you decided to become a trader. What do you love about being a trader?
Well, I think it goes back around 30 years now when I was in high school, when our economics teacher enrolled a group of us in a sort of stock trading competition that the Australian government was sponsoring as a way to get students and younger people engaged and involved in trading. And that whole process was just super exciting for me. The adrenaline, just the analytics aspect of trading just hooked me in from the very start. And I remember after that competition on school holidays, going down to the Australian Stock Exchange in Sydney and just sitting there looking at the boards and the runners going back and forth, changing prices in real time. It's just super exciting for me. And ever since then, I've kind of migrated from the action adrenaline aspect of trading to really understanding that it's a battle of oneself. So it's really, people talk about it being a kind of net market where you're really fighting against other traders, but I feel it's actually a little different to that. I think you're constantly battling oneself, one's strategy, and it's a battle to perfect one's ability to trade. That's really what I like about it. So it's a constant learning process, and one that I think you never really master in the end. You just get better and better at it.
Well, what you're saying there kind of leads me into my next question. And you mentioned it's a constant battle and a process. So do you think that becoming a excellent trader is an easy skill to learn? And to that effect, what's your approach to teaching someone trading?
Well, so an excellent trader, no, it's not easy. A trader, yes. So there really are a few barriers to entry into trading. Getting an account is obviously very simple. Moving some funds over is easy, and calling yourself a trader within a few minutes is also very easy to do. It's kind of like the 80-20 rule. It's 80% of it is fairly easy to learn and master and understand, and becoming a reasonable trader is also fairly easy to do. But for the most part, the real performers in the market are the 20% at that level. And they're the ones that beat the benchmarks. The 80% of the people do not necessarily beat the benchmark. So getting to that 20% is really the challenge. And that takes time, it takes experience. It's a process of learning to take losses and making mistakes. You can certainly read about them and understand them, but you really need to go through them yourself as a trader. And more importantly, when you do go through mistakes and losses, understanding why, what you did wrong, where the gap in your strategy may exist that resulted in those losses or those mistakes, and then correcting them and improving that strategy. So that's how you get to becoming a experienced or an excellent trader.
Now, you come from the world of trading gold. What excites you about cryptocurrencies? Why move from gold to cryptocurrency?
Well, it's not just gold. I really was trading the 90s .com boom, and that was really my first big exposure to trading. And then traded a lot of stocks through 2000s. It really was the gold bull market of, say, 2000 to 2011 that I'm probably more known for online. So there's a lot of correlation between gold and crypto in many ways. I just love the way they move in a cycle manner. So my study is the study of cycles, which is a process that identifies how a given asset class moves from one level of the sort of extreme negative sentiment up to a high and back down to a low. And that's really what I try to capture, is understanding each asset class and how it moves from one low to the next, and then trading around that cycle low.
Okay, I just have a couple more questions for you. And you're talking about, cycles, and that's something that I think people can expect on the Bitcoin Live platform from you. So tell me a little bit more, tell us a little bit more about, what you want people to know about you and what you'll bring to Bitcoin Live.
So again, it's going to be focused on cycles. And I know some of the other analysts have their own approach and unique approaches. So we're all kind of different in our own ways. Before I answer that question, I think it's important to understand that to be a successful trader, you really can't just follow people blindly. You really need to find a strategy that you can relate to, and something that really kind of resonates with who you are and how you trade. And that's what cycles did for me. So I immediately understood and appreciated and can really sort of visualize how cycles work in trading. And I was immediately hooked onto that. So people need to find their own strategy that's going to work, and hopefully with the broad array of analysts that we have on this platform, our members will be able to find that. But for me, it's going to be cycles based, cycles focused, and I will be producing a weekly report on the Bitcoin cycle and also an Ethereum cycle, which a lot of the altcoins appear to at least track and sort of move in a satellite manner to Ethereum. And that weekly report will cover the primary trend and the shorter term trend. And then from there, that's going to allow me to then provide throughout the week trade setups and sort of trades that I'm taking based on that cycle analysis that's presented on a weekly basis. So that primary trend analysis on a weekly basis sets the framework for then the trades that occur throughout the week. And then lastly, I plan on being fairly active in the forums, talking to our members and helping them with any cycles-based questions that they have, and teaching what I know about cycles and how I trade cycles to the community.
Okay, can you expand on that a little bit more? Can you talk a little bit about the correlation between cycles and cryptocurrencies?
Well, it's really not so much a correlation of crypto. It really goes down to the fact that everything in the universe, right? Let's get real scientific here. Everything in the universe moves in a cyclical manner, whether it's life and death, the weather patterns, interstellar satellites and systems, and that also is definitely applicable to asset classes. And every asset class has, let's call it a collective ecosystem of participants. And it's that ecosystem that evolves over time. And essentially, it becomes a heartbeat within itself. Let's call it that, if that's the right analogy. And the heartbeat is really the cycle. So we look at a cycle from, as I mentioned earlier, from one price low to the next. And you see this repetitive heartbeat occur in the price charts in a bull market and in the bear market. It may vary slightly or between a bear market and a bull market, but once you can identify that cycle and learn to trade with that cycle, that's where it becomes profitable. And that's really what I want to be focusing on with Bitcoin Live is identifying that cycle, teaching how that cycle works and operates, and also how to trade around that cycle.
Okay, you had mentioned to me a little bit before the webinar that you also want to do a demonstration. So can you tell us, can you give a little intro to the demonstration you're about to show us?
Sure. I'll pull up a screen here in a second with a Bitcoin chart going back to, say, the end of 2016, and just highlight really the cycles in a bull and within the bear market, and how I personally traded those over 17 and 2018. So let me take over.
Okay, Joe. So what I have up on the screen is a daily chart of Bitcoin to the dollar going back to early 2017. And you'll see a number of markings on here, and I'll walk through what most of these mean. Be aware, of course, like any technical study, there's a lot of detail to this, so I can't in a few minutes cover really what cycles are to in-depth level. But I'll give you an overview here, and I think that will be enough for some people watching this webinar to understand really what cycles are about. So essentially, a cycle is a measurement in time. And in this case, because we have a daily chart up on the screen, we are measuring the time between cycle lows. And a low is obviously a price low. It is an event that occurs in any asset class where the collective, let's call it the ecosystem or the followers of an asset class who trade and buy and sell and exchange in that asset class, they fluctuate in sentiment and view towards that asset class over a consistent period of time. So it's almost like history rhymes, and over a given period of time, you get this sort of pendulum swing between really bearish sentiment where everybody thinks, I guess, the technology is coming to an end, or regulation in Bitcoin's case is going to crush crush the technology before it gets started. And then, that spawns a short covering rally, typically is how they all get started. And then from there, you get traders come in and buy, and then you get people on Twitter and other places, for example, who start to talk about the money they're making, and that starts to get in the, let's call it the amateur traders or the loose traders and the leverage traders, and then that typically pushes up an asset class to what we call a cycle high. And a cycle high is represented on this chart with a red arrow. That is simply the price peak or the price high in any given cycle. So you'll see the green arrows represent the low, and of course that's a price low. It doesn't always have to be the lowest point in a cycle, but it is in around 95% of cycles. So we measure from this green arrow to this green arrow as one cycle. So here we have these repeating cycles going up to the peak. And then the peaks of each cycle also occurring at a given point in the cycle. Now, what's interesting to see here is that in this 2017 bull trend, you have the cycle peak in all cases but one occurring well beyond the midpoint of the cycle. And the number that we have on this chart simply represents the amount of trading days between cycle, what I call cycle pivot points. So when I say cycle low here at 69, it means it was 69 trading days from this cycle low. And this was 61 trading days from the previous cycle low, and so on. So this was 63 days to this cycle low. And then the same goes for the peak. You've got a trading day number here that represents how many days from the last cycle low did it take to peak. And what you see in an uptrend or a bull market is that the peak occurs beyond the midpoint. So 70 days, 35 is the midpoint, which is around here. We have 38 days, 63 days, 61 days. So in this really big bull cycle right here, which really was the big breakout from a big 2017 breakout from this sort of 1200, 1300 level, which you can equate back all the way to sort of 2013 and 14. But this was really the big breakout. So this was an extended bull cycle where it really went up for 95% of the period. 61 days up, really high above the Bollinger Bands, came down just for 2 days, formed a cycle low, and this is why you had this sort of consolidation cycle occur over just 50 days, which really is somewhat of it's not an anomaly, but it's definitely not consistent with the rest of the cycles. And that's because you had this extreme cycle on this end on the bull side that required a shorter consolidation cycle. But again, what you'll notice is that in a bull trend, we have what we call right translation in a cycle. And that simply means that the top occurs beyond the midpoint. So you have simply a function of more time for the cycle going in an uptrend versus the amount of time it has in a downtrend. And that's characteristic of any bull market and what a cycle looks like. And because you have more time going up, more trading days, the theory is, and it works probably 90% of the time again, you have more time going up, which means that the low eventually, because it had fewer days going down, will end up with a low that is well above the previous low. And that's why you have this series of higher lows, although this was almost a double bottom, higher lows all the way up because you have more time in each of the cycles, trading days going higher. And that's very characteristic of a bull market. So in a bull market, when you see these recurring cycles, and we saw this in gold, we see this in the S&P, we see this in all the asset classes in the bull market, when you see this recurring picture occur and you understand the cycle length, which is 60 days or give or take with Bitcoin, then you begin to understand that you can, at the early portion, so on a capitulation where price really does come down sharply on higher volume towards the day 60 area, give or take again, piercing the lower Bollinger Bands, that's when you're starting to look for new entries. And that's where you're going to buy the dip, right, in a bull trend. You're buying these dips around the day 60 to 60 to 70 day range on the lower Bollinger Bands, and then you're trusting that the bull market's going to carry you forward from there. And then on the exit, right, you're not waiting to day 50 or 60 necessarily to exit. What you're looking at is kind of the second or third big push up to the upper Bollinger Band past the midpoint. So in a bull trend, you're going to trade, let's say you're getting in here day 61, you see the first big break, you see the second big break, you're probably waiting at this point, you're waiting for the reversal, you're looking at this, let's say a 4-hour chart, and then once you start to recover this daily candle that makes the low, and you go above, say, the 38.30 as an example, so somewhere in this area, you're getting in. But you're really not looking for an exit here until well past the midpoint. So you're probably not even looking at this area here, which is only around about the day 25 area. You're holding at this point. You may take some partial profit. You most likely would take a partial profit here on the first big push above the Bollinger Band. But then you're holding and holding and holding. You're still carrying the moving averages here. And then you're probably getting out around this area here. So the second, third, fourth day, you're probably getting out. Or you're still holding here and putting a trailing stop loss as it goes higher, and then you're probably getting out around about this here on this red candle. And that gives you an idea of how we trade a cycle in an uptrend. But then what's really important to understand is that there are cycles within cycles, and that's probably too deep for this very short video, but there are cycles within cycles where the shorter time frame cycle then adheres to a longer term cycle. And that longer term cycle in this case right now is actually a cycle that's in decline. So when we had this decline here that was followed by a lower low, you probably would have gotten in around this area here thinking that you've got another big cycle coming up. So this is where you would have been long here, and at this point here, you're probably getting stopped out at this point. And that's just the nature of any market, right? You're trading the primary trend, but you don't know if the trend has changed until you see evidence that the trend has really changed. And the evidence came around about this spot here, where we didn't see this day 60 area come up with a new cycle higher. And once this occurred, and we pierced down into this really long, extended, what we call transition cycle, transitioning from a bull market to a bear market, and we have this longer 80-day cycle, right at this point here, actually on this failure point here, we now know that we most likely are looking at a bear trend. And in this case, in Bitcoin's case, it's really not hard to see when you have a 20x move over 12 months. I mean, this is just as stretched and as far as really you would want to expect in any given bull market. So at this point here, you're now looking bear market. You're now looking, okay, declining cycles. And at this point here, you're not really trying to get long. You're either just being defensive and you're not risking capital, or you're hedging and you're looking at these kind of peaks here as an opportunity to get short. And this first one may have been an opportunity, and you may have taken some profit here. You probably would not have gotten stopped out here. You're probably going to remain short, or you're getting in short around this point, because now we're looking at a midpoint where the peak occurs before that midpoint, day 27 of 60 days. So you notice now the change in character here. You now have shorter periods of rallies. You've got a new process of lower highs as we go down, as opposed to the bull market where you have higher highs in the cycle. We're now in this new period of lower highs. That's characteristic of a bear market. It's just the way markets operate. It's not an opinion on the technology or the long-term viability of this asset class. It's simply showing us that we now have a period of declining cycles. And we really don't know when those declining cycles will end, or if we will see further price lows. At the moment, I think we're on day 52, if I'm not mistaken. We're looking okay. I mean, but we still have a cycle low due at the end of this month, which means that in theory, that low could be something like this, like a capitulation that comes into sort of this area. It could even be much further down, or we could end up with a cycle low around here. Then we get a rally, which most likely will not, very likely will not exceed this prior cycle high. So you get this rally here, short covering for the most part. Then you get a bunch of Bitcoin influencers jump on and say how we're now going to 20,000 rapidly, and we may, of course, but we don't know that. And then you get to this point where around the, say, 90 something hundred level, that's where it's a matter of knowing or waiting, I guess, to see where the cycle is heading, where Bitcoin is heading in a cycle manner. So until we see a real breakdown or breakout, more importantly, of this lower high structure in the cycles, then we really must assume and remain defensive, must assume that we're in a declining phase. And if that's the case, we want to be shorting the rallies and covering on the dips, as opposed to in a bull market where you want to be buying the dips and you want to be selling the really big pushes above the Bollinger Bands. Okay, and that's really what we're looking at from a cycle standpoint. Day 59 was the last cycle low. May 30th is 60 days. So what we're looking at here in the next week to 2 weeks is at some point a decent sell-off on high volume that results in some level of capitulation, and which very likely pierces the lower Bollinger Band. Once we get that, we can try to buy that dip because we at least have a significant cycle low. It's not like this dip, for example, which is in a declining downtrend where we know the cycle still has some time left. So this cycle low can be bought, but then the preceding rally out of that, we want to be quick to take profit only because we still have to assume we're in a downtrend. If we're in a bull trend, as I mentioned earlier, we don't have to worry about that because we know that there's a very good chance, nothing certain, of course, this is just a study, it's a tool to provide an edge, but in an uptrend, we at least know that the cycle high is most likely going to occur well beyond the midpoint, so beyond the 30-day mark at this point, and we can be a little more aggressive or we can be a little more patient with these pullbacks because we know there's a chance that a high is going to occur much later in the cycle. But at this point in the coming cycle low and the coming rally, we kind of want to be out by, say, day 20 at the most, or at least have a tight sort of trailing stop or take some profits, move up the stop on the rest of your position and so forth. So that's just an introduction, Joe, on cycles. I know that probably went over a little longer than you had hoped, but that should give the viewers an idea of kind of the material that we're presenting on Bitcoin Live.
Bob, that's excellent stuff. Thank you so much for that demonstration. Thank you for your time explaining what you're going to be bringing to Bitcoin Live. Any final thoughts?
Thank you, Joe. No, I'm just super excited about this. I'm happy to be working with some great analysts. I really welcome the community aspect to this platform. I hope to be involved and engaged. And I think it's just going to be, I think it's just about time that the crypto space really has a professional platform for people to come and learn and to engage with others. So thank you for that.
Beautiful. Bob, thank you very much. Thank you for watching. Sign up for Bitcoin Live with Bob Loukas. Hope to see you on Bitcoin Live.